Good morning. Welcome to Finance Breakdown. It's Wednesday, February 10th, and later we'll be looking a bit closer at Tesla's foray into Bitcoin. Meanwhile, as the Senate's Trump impeachment is ruled legit, earnings report left markets mixed yesterday as the S&P lost to 0.1% on closing, with the Nasdaq and Russell just slightly up. The dollar continued down for a week now, after a 2.5% reduction in the Redbook index yesterday, but a slight improvement of 6.65 million job openings, according to the U.S. Labor Bureau. Consumer inflation wholesale inventories will be on everybody's mind at 1:30 p.m., at which point a look at gold and the dollar index up here should indicate just how strong that downtrend really is. The MACD has been negative for most of the trend, and the RSI only now seems to be edging towards oversold, so that support level at 90.1 seems quite legit, and there's a good chance we'll see gold continuing to rise as well. European indices were also mixed yesterday, mostly a tenth on either side of the zero mark, but the DAX losing an entire 1/3%. Both the euro and the pound are slightly up this morning after Germany reported a 0.3% contraction in CPIs. The nation's trade surplus in December improved marginally, but beat expectations by about 200 million euros, while Italian industrial production fell 2% year on year. In Asia this morning, equities are all up 2.3% in Shenzhen, 1.43 in Hong Kong, and 0.2 in Japan. New Zealand's Dow fell by about 0.4% upon closing, while the Australian dollar continues its week-long rise overnight thanks to improved consumer sentiment. That's according to Westpac Bank's survey for February. More inspiring is the 10.9% increase in building approvals down under. And in China, just as the Lunar New Year festivals closed the markets, consumer inflation for January came in at -3% year on year, but the PPI rising by 1/3%, both perhaps reflecting a record $560 billion in new loans issued by Chinese banks in January. That's triple December's number. Oil capped its 2-year record 10-day surge despite yesterday's surprisingly good API report. That's another 3.5 million barrels drawdown, and gold seems to be completing a cup and saucer formation that's exploring the 1840 region but failing to breach the upper borders. And Bitcoin continues north. This morning, Zero Hedge is analyzing JP Morgan's latest attempt to undermine the crypto, but they're fighting an uphill battle in the rain. Mark DeCambra in MarketWatch explains Musk's caper as possibly an attempt at diversification, a publicity stunt, quite an expensive one, or simply brand management, with Tesla once again playing the part of the disruptor. He only mentions the mighty reserve dollar, but Coinbase takes that a step further, saying Chinese officials were readying to launch a probe against Tesla. That seems to be the season for that. And strangely, they backed off after the Bitcoin purchase. Whatever the story, it's clearly still early in Act 1. In corporate news, Toyota this morning reporting beat expectations by a whopping 75%, reporting 988 billion yen in quarterly profits. The company has hiked its forecast for this quarter by 54%. That's thanks to the resurgence of auto demand in China and other pandemically recuperating countries in Asia. For those in the rest of the world, staying at home means more shopping for lockdown kids, a boon for Mattel, which beat earnings estimates last quarter with sales rising 10%. Twitter revenues rose 28% year-on-year to $1.29 billion, with ad revenues at 31%. But Cisco revenues declined for the 5th quarter in a row, despite the lockdown's usually fertile grounds for the digital communications environment. In Europe, both ThyssenKrupp and Societe Generale delivered disappointing results for Q4, revenues falling by 24% and 13% respectively. And finally, Boeing shares are up after the company announced the delivery of 21 737 MAXs in January. Coca-Cola, Uber, GM, and Heineken are the reports today to look out for. And so that's it for another edition of Finance Breakdown. Join us again tomorrow.